ASX 200 reporting season is all but over, with the results largely disappointing investors. I'm Kyle Rodder, and in this week's Investor Spotlight, we wrap up the reporting period and look at the results and charts of the Commonwealth Bank of Australia, BHP, Fortescue Metals Group and CSL. On balance, it proved to be an underwhelming reporting period for ASX-listed companies. When looking at the ASX 20, an index of the market's biggest companies, the 11 that reported posted a weighted average earnings growth of negative 3.48%. As the table below demonstrates, the big miners were amongst the biggest drags, while QBE and WiseTech posted noteworthy increases in earnings growth. Along with increased interest rate rises in Australia and the United States, weaker than expected company profits and cloudy guidance from management teams contributed to a roughly 2% drop in the ASX 200 over the past month. The index is carving out an ascending wedge on the charts as price momentum moves lower. A confluence of technical levels now sits at 7,200. Here is a recap of 4 ASX-listed companies that reported this period. Given the falling iron ore price at the end of 2022, investors were prepared for a considerable drop in BHP's profits. However, the decline in the miner's top and bottom line proved larger than expected, with profits missing analyst estimates by almost 6% and contracting by 32% from a year earlier. Despite this, BHP paid a slightly higher dividend of 90 cents per share, although this was 40% lower than a year earlier. Warnings of weaker iron ore demand out of China in the medium term rattled investors and contributed to a lower price for BHP stocks following the result. The financials reported by the Commonwealth Bank of Australia were stronger than analyst expectations. Revenues were in line with forecasts, but profits were at 3% above consensus estimates, with the bank reporting an interim profit above $5 billion for the first time in its history. The result underpinned an interim dividend of $2.10 per share, which was consistent with expectations and the payout delivered in the prior half. Owing to a very rich valuation and a narrative surrounding a peak in net interest margins, CBA shares tumbled on the day of the company's results, with the stock shedding close to 10% since. CSL reported stronger than expected revenues but softer profits for the half as the company continues to deal with disruptions to its business and a higher cost environment, along with one-off costs associated with its acquisition of Vifor Pharma. Plasma collections continued to rebound in the half, returning to record levels. CSL paid a smaller dividend than the prior half of $1.07. Investors were left disappointed with the results overall. Combined with higher yields amidst fears of more aggressive interest rate hikes in Australia and the United States, CSL shares have fallen in the past fortnight. Like its other iron ore mining counterparts, Fortescue Metals Group posted a significant drop in revenues and profits for the half and reduced the size of its dividend. Unlike BHP and Rio, FMG's numbers were in line with expectations, with the company's share price better supported following the release of the results. FMG's shares are struggling to regain upside momentum, however, as the stock generally struggles and investors price in the cyclical peak for mining profits.